Hi everyone, and thanks for joining us at this, our inaugural TechKnow Invest Roadshow webinar. For those of you who have known or been to TechKnow Invest in the past, you will understand it is the preeminent event for uncovering and identifying interesting and emerging and what became or become significant technology and biotechnology companies. This is our first webinar because we felt that while a number of us are in some form of lockdown or unable to get together as big groups, that it was important that we continue to bring you a number of these fantastic companies. A little bit of housekeeping. If you would like to ask questions of any of the presenters, you will see a Q&A function at the bottom of your screen where you can submit questions to the presenters, which I will then put to them at the end of their presentations. And if you have any other questions or concerns, please use the Q&A function to address those. We do have three great presenters, Ralph from Volpara, Tony Keating from ResApp, and Rod Sherwood from CV Check. Three fantastic companies that I believe you will get a lot of interest from. So without further ado, I'd like to introduce Ralph from Volpara, who will give you an overview of the Volpara story. So Ralph, over to you.
Cool, thank you, David, and thank you for inviting me to the inaugural TechKnow investor event. These are always great events which help us connect with retail, so please do use the Q&A. You know, one of our mantras all the way along has been transparent and open, so please do use the Q&A. So look, yeah, Volpara is a company focused on saving lives from breast cancer. I did my PhD at University of Oxford in the 1990s, so I spent 30 years now looking and devising ways of using AI to analyze breast x-rays in particular to help the early detection and diagnosis of breast cancer. We'll go to the next slide, please. And the next one. So yeah, I started this journey in the 1990s. We tried to commercialize it from Oxford in the year 2000. It was too hard at that point for various reasons. The clinical world had not caught up with what we were doing. So myself and Professor Sir Mike Brady went into brain imaging. We were very successful at that, and we sold the company to CTI and then Siemens, at which point I moved to New Zealand. 2009, I sat down with Professor Sir Mike Brady and we said, all the technology from my PhD, and now is the time for it. The clinical world is crying out for it. Women across the US need to know this information. So we started Volpara here in Wellington, New Zealand. Roll on 10 years or 11 years now. We are a software as a service company. We use AI then to improve the early detection of breast cancer. We do this by providing a range of tools to over 27% of the US breast cancer screening population. We provide clinical decision support tools, and I'll talk a bit more about that in a minute, and practice management tools. And the aim then of my life, really, my career over the last 30 years, cost-effective reduction of breast cancer deaths. They run over 500,000 deaths globally each year. So we hear a lot about coronavirus, obviously, in the news, and the number of deaths from breast cancer each year is significantly higher than where we are at the moment. So although it's not classed as an essential service, it very much is a critical one, and we're hearing and seeing breast cancer screening coming back online now right around the world, and we'll talk more about that in a minute. Breast cancer screening is a big opportunity. Over 750 million annual recurring revenue, we believe, is the total sum available. That's based on 92 million women a year getting screened. Around half of those are in the US. Volpara's got first mover advantage around the world. We're just up to 39 countries now. That says 38. We actually got a deal in Hong Kong over the last few days. We're up to 39 countries. We have a great competitive moat in terms of IP, papers, product suite, regulatory, and scale. And importantly now as well, with over 27% of US women being scanned using our software. These images are flowing into the cloud, so we have a fantastic data set for future product development. Alongside then that percentage, we are up to $18 million of annual recurring revenue. Remember, we're a SaaS company. That was at the end of March. very significant growth year on year and very low churn. Gross margins are 80% above, and we've just done a raise, and we'll have around 64 million or so in the bank post-raise, so we are very well funded. Now, obviously, coronavirus is a big issue globally, and this is one we get most questions around. So let's just address a few points on coronavirus. One, if you look behind me in the picture here, this is Wellington on a nice day. It's a spectacular place to live. It's a spectacular place to live because we get earthquakes and therefore hills. Because we get earthquakes, from day one of Volpara, we've been born on the cloud. So we've been working remotely. We're working from home from day one. So working at home in lockdown really has been no issue for us. So we've been a very resilient company. We operate in a very resilient industry, breast cancer screening, which is restarting. And now this next wave, but also the business model that we use, our SaaS model, involves annual payments up front rather than pay per click. So with the annual payments up front, what we're finding is customers are saying to us, yep, we're locked down, we're not screening at the moment, but we're going to catch those up once lockdown comes off. So cash collection's been very good to date, and we're not getting any churn at the moment, although we remain on watch, obviously, throughout Q1 and Q2. I will add again that fourth bullet point down here. We've got an outstanding team here in New Zealand, Australia, but also the US. We have a direct sales force in the US, very, very experienced, very used to doing remote sales, but also excellent networks in place already. In these low travel times, it's critical that obviously I trust the people in America, but also customers in the US trust our salespeople because they know them. So they'll get on these remote calls with them. Now, we're seeing opportunities with companies around the world. We did an acquisition last year of a company in Seattle, MRS. That acquisition went very well. And in December this year, we started saying, okay, that one's gone well. Let's start having a look for the next one. So we actually did a lot of research on this early this year. Obviously, that all went very cold and quiet during the coronavirus period, but now we've come out of that with very strong Q4 results, very good, strong cash collection, and now an oversubscribed capital raise. Obviously, we're starting to look now at those opportunities again. And one of the purposes then of the capital raise, one was to strengthen the balance book, which was already strong, but the second one was to be in a great position to help those companies should they come to us and say they have cash flow issues, and we can take advantage of that. So we could go to the next slide, please. Yeah, so we put the 4C out at the end of April. So our Q4 is end March. So the 4C there showed very good cash receipts again. No noticeable effect from coronavirus. Good cash received over the year. Good strong cash in the bank. It was 2-year cash in the bank at least, and obviously a lot more now with the post raise. But also then in a couple of weeks' time, you're going to see our full year results come out, the unaudited numbers up there on the screen. I'm not going to dig into those too much, except I'll note the GAAP revenue, which is the kind of the official accounting one, is 12.5, which is a very significant increase over last year. But the top one there, the non-GAAP annualized revenue, shows the strength now of the combined group, Volpara plus the company we acquired last year. So we're in a very good spot at the moment. Good SaaS revenues, no churn, and we're seeing very little issue at the moment with cash collection. So we just go on one. Yeah, year on year then we've shown strong growth. Number of images in the cloud, critical for product development. The ARR up there on the top right. And then also as a SaaS company, the other important metric is annual is price we get per woman. And we're seeing quarter upon quarter now increase in that number. Most Q4 deals are actually between $1.40 and $3.50. So we're going to see that increase as these new deals come through. Let's go for the next slide, please. Let's just take a bit of a step back. Breast cancer screening is a big business. We are big fans of breast cancer screening. There was a study that came out today showing a 40% reduced mortality if you go screening, but there's many ways to optimize it, and our job is to use AI to optimize it. But look at the bottom right there, you'll see 2 x-rays. One is very white and one is black. The white one is a breast full of dense tissue. That woman has much higher probability of developing breast cancer. But then if that cancer develops as the white star is meant to emulate a cancer, it's much easier to see on the fatty background than it is on the dense background. So just go on one slide, please. So as of December, after the acquisition last year of MRS, one of our aims there was to collect all the data together from patient tracking and the images. But the other one was to have our sales team walk in the door and not just sell one product, but sell a whole platform of products. So one walks in now, she can have her x-rays are done. Volpara Live, our real-time quality control tool says, yep, they're good images. You can go home. Or there's a bad image, we're going to retake it whilst you're here. Those images then flow to the radiologist up there on the top right. She then looks at the images in full knowledge of a breast density score, which she can rely on from Volpara Density. She has a lifetime risk of that woman developing cancer, and she has help in the form of computer-aided detection in looking for cancer in those images. We've just done a deal now with Ambry Genetics as well, whereby if a woman is at certain risk levels, that woman will automatically also then get a letter saying you qualify for a genetics test as well. So that we announced a few weeks ago, so that's starting to roll out now. Each of these products adds to ARPU, obviously. All the data images then flow up into Aspen Breast and Aspen Enterprise down the bottom, which really are cloud-based and give us an amazing resource to do quality or enterprise-wide quality assurance and so on. Let's go on the next slide, please. We believe we can get up to $10 ARPU, so we're sitting at $1 at the moment. Each of those products down there on the menu on the right, our sales team has the ability to walk in the door now and quote, and we have some outstanding quotes going through the system. Sales cycle 6 to 9 months, so we started in December, so we're starting to see the stream of these big SaaS contracts starting to come through now. They are going to be delayed because of coronavirus, but things are picking up now. Q1, Q2 are traditionally our very weak quarters anyway for us, with Q3, Q4 being the strong ones. Let's go to the next slide, please. The US then, which is about 90% of our market, we're geographically strong across the US. Some very strong luminary sites, MD Anderson, MSK. We're also then looking to the FDA to come out later this year with a mandate that all women should be told breast density. We are leaders in breast density reporting with Volpara Density, so that's going to help drive interest in our tools. So we're looking forward to that. We did hear this week that that is still on track for October 2020. Last slide, please. Oh, sorry, one more. So yeah, look, we are a US predominantly, but Australia and New Zealand were very strong. We've taken a decision this year, we're going to focus Australia, New Zealand and US and Canada, and not so much Asia and Europe because of coronavirus, which is out there. We do have our first public screening program signed up. That is going live again now. It's been delayed because of coronavirus, but we do expect to announce it over the next few months. Please move on. So last slide, look, I think with coronavirus, it was critical early on that we recognized the world had changed. So we're focusing US, Australia. We've also recognized the need to build much stronger Australia, New Zealand and US integration. So we're doing a lot of internal work to make sure very smooth communication flows. We are going to continue to innovate. This is not a time to stop innovating. The contracts we've got are very resilient, and as I said before, we're not seeing any issue cash collection. We are seeing sales slow, but Q1 for us is traditionally very slow in any case. Having a strong US team is critical in this time of coronavirus. We ain't going to be jumping on planes from New Zealand to go there anytime soon. So we're in a great position, very strong position because of that trust we have with that team. We're transforming to digital and remote sales rather than trade shows. And we're going to see a big jump up there in sales productivity. And we're also partnering to scale Ambry Genetics, GE and others. And yeah, fifth point then, just in terms of 21 outlook, capital raise was to strengthen the balance book for whatever COVID-19 threw at us, but also then to leave us in a position to take opportunities as they arise from companies that have less resilient business models than ours. So look, with that, David, I think I'll open the floor to questions, please. Thank you.
Thanks, Ralph, for such a great and thorough presentation. Clearly a business to watch that has grown rapidly and backed by a team that know what they're doing and have achieved success in the past. One question I had, and you touched on it at the end, which relates to opportunity. In the field, how much opportunity is there for Volpara to build out further business units or acquire business units? And where do you see those opportunities arising from?
Yep. So, David, we've been tracking. I've been in this industry for 30 years, so I know all the companies out there in Europe, the US, and elsewhere. There's 4 or 5 in particular we've been tracking for the last 3 or 4 years. We chose MRS last year because it really suited our needs at the time to increase market share. We are looking at companies now that we know extremely well that would really help us big jump up in inorganic market share growth. Also, there's companies which would really help us drive increased ARPU as well. And they range from some of the ones I showed from the products on the chart earlier through to new ones that are coming on the market with new ideas around how to help breast cancer detection. The focus is still on breast cancer. We are doing a lot of work on lung, but we want to keep on focusing on breast cancer this year. So yeah, there's 4 or 5 main ones we're looking at. And we are obviously actively working them. I would have expected term sheets to have gone out the door by now, but obviously coronavirus threw a few spanners in the works when I came home from the US in February this year. But yeah, lots of opportunities out there.
And for those opportunities, are they almost, in some respects, sitting and waiting to see what will happen to their own businesses before they make a decision, which clearly can be impacted by valuation? Or is it more a case of just, look, let's just put everything to the side and see what happens?
Yeah, no, I think fair to say, I mean, one of them, for example, in the US has got a pay-per-click business model. They're a company without a strong sales team. So they're seeing their cash flow really get affected because screening stops, they've got no cash coming in. So that's the kind of company that's really starting to engage with us now. That's the kind of company we visited in January, February time anyway. So it was a very timely visit, and that's really, coronavirus has helped focus their mind really on the need to come out of this strongly, and they don't have the cash balances really to help them through, what's a very tough phase, obviously, for many companies.
And look, this may not be information you want to share, but do you have an ARPU target for full year 21? And how sticky are your clients if a competitor came along? Are they, once they're in, they're in?
Yeah, so we do find we've had very little churn over the last 4 years, basically. Once we're in and once we're into the processes, it is very sticky. The FDA goes into these sites each year, and once you're into the process whereby the FDA is coming in, okay, we're going to show you Volpara. Here you go, FDA. You don't want to move away from that. And obviously as well, the longer people use this, the more data we have up there in the cloud. So yeah, it is a very sticky product, which is great. We don't have a particular ARPU target in mind, but one of the numbers we are going to be reporting on a lot more this year is the ARPU that we're getting from new deals. So in Q4, for example, which was January to March, the ARPU we were getting was $1.50 to $3.50 on our SaaS deals, which is obviously very high, 50% higher than the average ARPU we're getting across the entire install base at the moment. So yeah, lots of scope to grow. We've got some fantastic deals sitting out there, being delayed at the moment because of COVID-19, but still moving. And
a focus on being cash flow positive?
Certainly that has been a big focus. In January, February time, we did a great strategy meeting. We had a very aggressive strategy set down for the next few years, which was all about growth. Obviously, coronavirus has really refocused everyone's minds, and cash flow positive has really come into clarity because of the uncertainty out there. To that event, we have obviously we merged with MRS last year, So we have now done post-merger restructuring to cut costs down by 10 to 15%. And that is part of this drive towards cash flow positive now because of the wider uncertainty out there.
Ralph, a great presentation, a great company. Thank you very much for your time. There were some additional questions which I will get put to you, and we'll get those circulated if we can to the attendees. But Ralph, thanks for your time.
Cool. Thank you, David. Thanks for everyone for attending. Thank you.
Our next presenter, Rod Sherwood, is from CV Check, and Rod will give a presentation now about the business and how it has expanded significantly in recent times. So Rod, over to you.
Thank you, David, and good day, everyone. My name is Rod Sherwood. I'm the CEO of CV Check, who is listed as CV1 on the ASX. If we can go to the next slide, we'll just start the presentation. So the group is now established. It's an HR tech business in people screening and verification. It's sustainable. It's a growing organic business, or it has been through till COVID struck. B2B is our primary growth engine, and B2C is an area of our business which we pick up by virtue of the work we do in our go-to-market on B2B. More recently, we've been leveraging the base market position through HR tech partner integrations to make CV Check available as a software as a service behind other HR tech vendors. So that's working out quite well. Recently, we released our 4C and results to 31 March, and we produced 10.2 million ARR. Our revenue is proving resilient under COVID-19, and we're in a very strong cash position, no debt, and good cash flow performance. So if we go to the next slide, you can see some of our clients. We transact with large enterprise, government, small to medium-sized business, and also individuals. So we have a very, very diverse and wide customer base across Australia and New Zealand, and it gives the business a hell of a lot of options, and we disaggregate our market. If we go on to the next one, I'll talk to you about what we do. So background screening and verification is about managing people risk. And when we think about why that emerges, essentially for any enterprise, be they government or private, they will combine physical assets and people to produce a service or good that they sell to their end customer, and that has utility. Now, trusting workforces is really powerful in enabling that to occur seamlessly. And as people come into businesses, some of them are very good and have the capability sets you need. Others need developing, and others misrepresent what they have. And to see quite what I mean by how deep representation goes, if we take a look at the next slide, we can see that some people have a tendency to exaggerate their capabilities. Some will lie, and there's a reason for that, and that is that over time, since we moved out of the fields and working physically where you could observe someone, jobs have moved into the service sector where it's a lot harder to tell minute by minute how someone is performing. And a lot of those jobs have very high pays. So it's quite tempting for some people to fudge their capabilities. So if we move on to the next slide, the reason why customers come to CV Check is to help them manage their people risk. They come to us to confirm that the person is who they say they are, that they have the right identity. And then they use us to verify the facts about that person's past career, their qualifications, and so on. And they use that data and history proof to make assessments as to culture, values, and the fit, so they have a clear idea that that candidate is the ideal candidate to come into their workforce. From there, that candidate will evolve, and it may be that they get rescreened for compliance and also for moving into other job roles within the organisation through time. So there's two revenue streams available to us. We deliver that through a great technology platform. So if we progress on to the next few slides, we'll work our way through that. So we've been building our technology since 2004, and naturally with the advent of mobile phones and telecommunication evolution, the ubiquitous nature of that for candidate and people management and the way that works, we can plug all that together. And we couple that now with the migration that we've made into the cloud, whereby we actually have a very scalable solution. And the primary constraint on it is how much business we can feed into the front end and how we handle our candidate management. So it's a very advanced system. I could go on about it for days, but basically it is best in breed. It is able to work across multiple geographies, and there's a lot of technology behind it, which we're constantly building on. Because we invested so much in this system and we did that on an ongoing basis, we were able to go 100% remote as COVID struck within 3 days. And that's been serving us really well. Our productivity by doing that has improved throughout, and it was seamless. Our clients certainly noticed the impact. If we move on to the next slide, we can see that this platform is about providing a secure, privacy compliant exchange of information between individuals and business customers and CVCheck. CVCheck then sources information either through workflow engines that it's built itself, so it builds its own data, or it will insource that from suppliers that hold certain very private data like criminal history, bankruptcy data, and so on. And we provide that through an Asia-based platform from Microsoft. And then on the right-hand side, we also make it available to customers through other HR tech partners, such as PageUp, Xref, or more recently, LinkedIn through their Talent Hub. So these broaden the addressable market that we're able to reach, and it makes it more available for companies to embed into their existing enterprise. And they can pull CVCheck down from the cloud as a microservice background screening company. If we move on to the next slide, we've been going now for a number of years since we floated. And you can see here our revenue trajectory. In essence, the light blue colours are our individual B2C customers, and the teal colour is our B2B business, which is steadily growing. We've taken an approach where we are focused on B2B, and we now direct all of our business development attention to there whilst maintaining our B2C business. That's paying us quite well in the sense that our ARR is rising strongly, very consistently adding to it each year. And we're also seeing that we're increasing sales across our product range, which is widening our margins. B2C is now over 70% of our FY19 revenue, and the business is more cash neutral than many. If we move on to the next slide. So in terms of revenue performance, we've had in the past 9 months to 31 March, we've outperformed the prior comparable period, and we've improved our quarterly ARR progress every single quarter. You can see there's been headway made. So quite pleased with that. Under COVID, we're monitoring that quite closely, but we're seeing that our revenues are fairly resilient. But we're more than anything, we're pleased with the fact that our customer repeat rates and retention are very high, and we're seeing a broadening of our average revenue per account each quarter. So that's working out quite well, and our continued B2B wins will add to that through time. Next slide, please. So COVID-19 has affected Australia and New Zealand quite markedly. We're quite pleased to say that we were able to respond to that. You can see here 2 charts. The first is a chart for our Q3 revenues and the composition. We had relatively low exposure to education, hospitality, tourism and retail, and quite high exposure to government, finance, recruitment, construction and ICT and care. And that's played out to our advantage in the sense that whilst education and retail were down by more than half, we have seen that the other areas have picked us up a fair bit, whilst the rest of the industry has been down a little. So in all, in April, our revenue was 25% lower across the group as compared to the same period last year. And we were able to adapt in a very agile fashion such that our cost measures buffer revenue by more than 35% now across this quarter. Many of those measures are permanent, and we're just going to monitor how COVID plays out. But our basis is to survive and then thrive in the post-COVID environment. Next slide. This talks to our balance sheet. We have a very strong balance sheet. Cash at bank of 4.9 million at the end of March and no debt. During last quarter, creditors were reduced markedly and our debtors remained steady, but the quality of the debtor book improved. We did have a number of factors which contributed to the 0.9 of cash burn last quarter, whereas generally we are cash flow neutral. We had marketing and product costs carried forward from the December quarter. We had quite high recruitment fees as we fleshed out our C-suite and business development teams. Then later in the quarter, as we responded to COVID, we took some restructuring costs early to deal with what we thought were low ROI returns in the medium term. So we took those out, and we also had to take some additional costs for admin and property as we shifted everybody to work from home. Additionally, we had a late dip in March in our order flow and a change in composition such that large enterprises who are largely done on post-pay on account were a higher proportion of revenue than normal. So that shifted revenues from the March quarter into the June quarter. Finally, what we're seeing now is that our upfront cash receipts relative to prior pattern have improved versus the 9 months to the end of March. So we're actually seeing beneficial cash flow outcomes in the current quarter. Moving on to the corporate profile. As I said, we've had nearly 10 million of revenue to the 9 months ended 31 March. Our ARR is a rolling 12-month record, and that came in at 10.2 million. So on an annualized basis, we do quite a bit more than that with our individual and new business sales. So this ARR is a lagging indicator of where we're going. It is not the normal exit ARR that people see. It's quite conservative. Gross margins are solid at 55%. The cash balance is 4.9 million, and we're doing quite well with those cost measures to build that and re-strengthen it. And the market cap is a modest 25 million. So if we go to the last slide, if there are any questions on Q&A, I can respond to those.
Thanks, Rod, for a great presentation. Good to see a company that has adapted quickly to the restrictions imposed by COVID-19, and particularly being almost remote ready from day one, I think has made that transition reasonably seamless for you. A couple of questions have come in. So one question particularly relates to the verticals in which you operate from a B2B basis. Are there other verticals you could see as opportunities for CV Check?
There are. We are in Australia relatively weak in the banking and wealth management sector. So we have been working on that. And we actually went to a growth stance after assembling all the teams earlier in the financial year, and we had to unwind some of that. So that's probably delayed us a couple of months. But we are preparing steadily, and we look to the new financial year to see if we can make that stick.
And in terms of opportunities, clearly a well-structured business with a solid customer base behind it and a fantastic tech and a good cash balance. What do opportunities look like for CV Check, be it in verticals or other business opportunities, or potentially looking at businesses that have been affected by COVID that may present an opportunity for you?
Well, businesses in our sector that have been affected by COVID may present opportunities, but until they're there, it's almost irrelevant to talk about them because you can't talk theoretical. However, we do have a number of opportunities always arising in product and what we're picking up through our client engagement. And that means that if we could, because we're a multi-product platform and we can release and do an agile development program to bring in new product, we're constantly seeing new opportunity there. The key now is, having had a number of good successes, it's increasing the pace and taking the insights we have and developing faster so that we can leverage this client base we have, which, as you've observed, is really solid. We have in all around 25 or 30,000 B2B customers signed up with CV Check. Of those, we're seeing repeat revenues from a very large portion of them. And we have almost 1 million individuals who have come to us and purchased separately from those. So there's a lot there that we can leverage. It's about actually unlocking that leverage and deploying it. Our focus up until really only about 9 months ago was just making sure we grow to a point that we have a sustainable, cash neutral business, which we've done. And now we're looking about leveraging that into much greater penetration of product, which will broaden our margins and increase our share of wallet from our customer base.
Rod, a great presentation. No more questions from me or the audience, but a thoroughly enjoyable presentation. Clearly, you've laid the foundations, as you say, for a springboard from here. A great tech, great people. You should be very excited about what the future holds. So thanks for your time.
Yep, thank you, David.
Now moving on, we've got our last presenter, Tony Keating from ResApp, who will run you through the ResApp Health story. And Tony, over to you. I'm just conscious of time. If people do have questions, please feel free to use the Q&A function and we'll get through as many as we can. So Tony, over to you.
Great, thanks David. And thanks everybody for joining this webinar. It's a pleasure to be back here at TechKnow to be able to present the ResApp story to you. So if I can have the next slide, please. This is the standard disclaimer as an ASX listed company. So who are we? So at ResApp Health, we are a company that is developing clinically validated, regulatory approved smartphone apps to both diagnose, screen, and manage respiratory disease. So we have a really strong focus on using digital technologies to help people manage and help us manage respiratory disease. Our prime focus right now is the commercialization around 2 products. The first is ResApp DX, which is the world's first regulatory approved smartphone app for diagnosing respiratory disease. And the key value proposition, especially right now in today's COVID times, is that we are really the only respiratory disease diagnostic test that can be used for telehealth that does not require an additional piece of hardware or an additional accessory to be sent out to all the telehealth providers. The second product that we're really excited about as well is Sleep Check, which is the first clinically validated smartphone app for screening sleep apnea. Essentially, you put your phone on a bedside table, wake up the next morning and have an instant screen, an instant risk measure of your sleep apnea. So really excited about these 2 products, and we should see these in the market this quarter. So next slide, please. So this is just our pipeline. So I talked about those near-term opportunities with ResApp DX and Sleep Check. We also have longer-term R&D projects around COPD screening, around disease management, and we're also working with Lockheed Martin on a US warfighter project. So next slide, please. So respiratory disease is the most common reason for you going to a doctor. It's actually roughly 50% of telehealth consultations are related to respiratory disease. These respiratory diseases can be anything from a very mild upper respiratory tract infection to a more serious condition like asthma or bronchiolitis or COPD of the lower respiratory tract, or something like pneumonia, which is obviously caused by COVID-19 or other viral or bacterial infections. So just next, please. Today, diagnosing these types of diseases is a complex, time-consuming process. It takes a stethoscope, it takes chest imaging, spirometry, blood tests, essentially a whole suite of tests are put together to make that diagnosis. And what we've found in our work is that this diagnosis is actually quite inaccurate. We've found that clinicians disagree with each other roughly 30% of the time when making these types of diagnoses. Next slide, please. ResApp DX is a smartphone app. This is our flagship product that we've been developing now for 5 years. It's able to rapidly diagnose respiratory disease using cough sounds. Essentially, we use signatures in cough sounds to differentially diagnose diseases. Think of a little bit how speech recognition or Shazam works. We listen for signatures in those cough sounds and then match those to particular diseases. So the technology is very straightforward and simple. We use the built-in microphone in a modern smartphone. We hold the device about an arm's length away from the patient. And the next slide, please. We ask the patient to cough 5 times. Next, please. Ask a few details about the patient's birth date, their gender. Next slide. A few symptom details. And then finally, on the final slide, we provide an instantaneous diagnosis of whether it's a pneumonia or asthma or croup. So then the next slide. So we've been validating this in multiple clinical studies, both in Australia and the US. I'm not going to go into all of the details here, but suffice to say that we've found a very high agreement between our diagnosis and the full clinical diagnosis made using all the tools available in a modern hospital. We've published this work in Respiratory Research, a peer-reviewed medical journal, and presented it at major medical meetings as well. Next slide. So as we move into the commercialization strategy for ResApp DX, the first port of call was getting regulatory approval. And so ResApp DX is the world's first regulatory approved smartphone app for doing this diagnosis. It's approved for clinical use in both Europe and Australia. And we're meeting with the FDA to really discuss those next steps in the US. We have good engagement with key opinion leaders here in Australia and in the US. And as I said, we've presented at major meetings and conferences. We've pushed this data and we're working closely with a number of telehealth partners, including Coview and Phoenix, to bring this product into the market. And next slide, please. So telehealth is what we've seen, especially over the COVID-19 epidemic, a fast growing area of healthcare, initially in the US, but now in Europe and Asia Pacific. To give you an example, the NHS in the UK have said that all patients will have the right to online consultations by last month and video consultations by April next year. What we found is COVID-19 has significantly accelerated the push in telehealth. Here in Australia, we've seen telehealth now become bulk billed and reimbursed. In China, someone like Ali Health recorded over 10 million telehealth visits in 2 weeks of COVID-19. And in the US, companies like Teladoc are now providing over 20,000 visits per day. That's a 100% increase of what they saw in March. So really, we've seen that massive growth in telehealth globally, and it's been driven by COVID-19 because COVID-19 is a respiratory disease, and we see telehealth as a way of keeping patients out of hospital and being able to manage at home. So on the next slide. So here we talk about what ResApp DX and how ResApp DX fits in with this telehealth. So ResApp DX fits in with this telehealth by really providing that only remote diagnostic tool. It means that we don't have to ship hardware to every patient who's using telehealth, and it means we can integrate into existing telehealth platforms to provide a seamless experience. We're working with 2 telehealth providers here in Australia, Phoenix and Coview, and those integrations will be finished this quarter and should be live on those platforms by the end of June. We've agreed to binding commercial terms with one of those providers, Coview, and the per test fee that we will receive per test is within what we previously targeted of $5 to $10. On the next slide. So telehealth is a big part of our market segmentation, but we're also looking at clinical use. We announced just yesterday that we're working with a COVID clinic here in Brisbane that's using our technology in person to triage patients to understand their respiratory disease without having to essentially contact the patient with a stethoscope or do a CT scan. So we think there's a huge opportunity in clinical use, and therefore this is a second market opportunity we're going after. On the next slide, please. So chronic disease management is another area. We see opportunities here. We've had some early R&D research. We've actually gotten some approvals already for identifying exacerbations in COPD and asthma patients. And you'll see more work from us on this soon. The next slide, please. Sleep apnea is an area we were interested in roughly a few years ago. So we saw an opportunity here, and that sleep apnea is one of the most common sleep breathing disorders, and it's really significantly underdiagnosed. So sleep apnea isn't just snoring at night. This is when you stop breathing multiple times, 30, 40 times every hour overnight. And what we found, or what they found, is that studies have shown that roughly 3 in 10 men and nearly 2 in 10 women actually have sleep apnea. And the key for us is that 80% of those people who have sleep apnea are undiagnosed. They don't know it. And if you're undiagnosed with sleep apnea, you are stopping breathing 30+ times every hour, all night. And this is linked to increased risk of heart disease, stroke, type 2 diabetes. The main barrier to diagnosis today is just that it's really difficult to and time-consuming process. So a full polyrography wired up with over 12 cables all over your body, including up your nose, around your chest, go into a sleep lab in a hospital, pay up thousands of dollars, try to have a sleep in an unfamiliar and an uncomfortable environment, actually require a referral to get there. We can do a home sleep test, which is somewhat cheaper, but is still relatively uncomfortable. So this is a major barrier for people to start going through the process of being diagnosed with sleep apnea. The next slide. So we saw an opportunity to identify sleep apnea from nighttime audio recordings. Essentially, we were able to use a smartphone placed on a bedside table that was able to use the audio signatures, so looking at your breathing and snoring sounds overnight, and accurately measure sleep apnea. So what we found was that found high levels of sensitivity and specificity in a clinical study where we compared just a simple smartphone on the bedside table to that full polysonography. So 12 cables, 12 measures versus a single audio measure from a smartphone. We're able to get sensitivity and specificity similar to what you get with a home-based sleep test. Next slide, please. So last month we introduced Sleep Check. Sleep Check is our app that uses those algorithms to provide people a way to screen themselves at home using their smartphone. Requires no wires, no cuffs, no attachments. Simply put the smartphone on the bedside table while you sleep and wake up to an instant assessment of your risk of sleep apnea. There's no referral needed. It's a download from the App Store and use, and it's approved as a medical device in both Europe and Australia. So we're launching this product this quarter in Australia and the UK on iOS, and we'll add additional countries and Android shortly after. So the final slide, please. So in summary, ResApp has been on a journey for the last 5 years to really develop 2 key flagship products. The first is ResApp DX. And ResApp DX is right at this moment the most interesting product we believe for telehealth, in that we're the only product that's able to remotely diagnose respiratory disease without having to ship expensive pieces of hardware to every customer for that telehealth platform. We have partnerships with Covio and Phoenix, so we're expecting ResApp DX to be live on those platforms this quarter. Sleep Check, being able to at home self-assess your risk of sleep apnea. Again, we're launching that this quarter in Australia and the UK. And then finally, we do have a broader pipeline with near, mid and long-term opportunities that see us really become the leaders in digital respiratory disease diagnosis, screening and management. So thank you very much, and happy to answer any questions that there might be.
Thanks, Tony. A great presentation. Always love hearing the ResApp story. As you would know, there are a number of questions coming through from our plus 200 investors who are on the line watching the presentation as we speak. I suppose I'll try and round a few of them up together if I can. FDA, do you have a feeling on timing of when you may look to engage further with the FDA? And do you think, given the restrictions that currently are in place in the US, that they may be open to taking trial results from markets outside of the US?
Yeah, so for the FDA, we've said that we would go back to the FDA to ask clarifying questions around their latest response to us, and we're still in the process of doing so. We have looked at some of the emergency use authorizations in the US. It's very important to understand that, remember, an emergency use authorization is only for a limited period of time. It doesn't give you carte blanche approval post the COVID pandemic. But we have been investigating those options with our consultants in the US and have approached the FDA around some of those options. So I'd say at this stage, we're waiting for to have a clarifying meeting with the FDA before we make any large strategic decisions around US market entry.
And in terms of ResApp DX and its integration with telehealth providers, and their platforms, how has that gone? Have you learnt anything as part of the process? Has there been any minor teething issues, or has it gone to plan?
So Phoenix and Covio were the first telehealth providers that we've tried to integrate with. And so, obviously there are a lot of learnings in working with them to integrate our technology into their platforms. Both CoView and Phoenix have very different platforms, so they're actually quite different integrations. But we think that what we've learned from those and the standard integration procedures that we've put in place now will make it much easier to integrate to additional telehealth providers in the UK or Europe or the US. So yes, a lot of learnings, but we're very happy with progress on those. And as I said, we're expecting those to be live this quarter.
And in relation to the COVID-19 clinic, is there any data coming back that's helping you shape some of your algorithms or your future plans in relation to the development or the expansion of the product range?
Yeah, so obviously as part of a customer use of the product, we have post-market surveillance as part of that. So that's part of our regulatory approvals. We have to monitor what people are doing with the product, with the medical device product. So we obviously do get feedback about how well it's operating in a particular environment. Obviously, the clinic were very happy with their evaluation period, and we're happy to move to the next stage of using it in their clinical operations. So yes, we do get feedback through the use of the product, and we obviously will take that into account as we develop the product further.
So clearly that's the scale opportunity. So I suppose now bedding those two down is giving comfort to other telehealth providers that you can easily integrate with their systems to further scale the business.
Exactly, yeah. For us to scale this business, we need to be very effective at integrating with telehealth providers. We need to be very effective at providing, the COVID clinic we're working at here in Brisbane is actually an in-person use. So this isn't telehealth, this is someone using a phone in person. So we need to be very effective at delivering a solution that can be used in an in-person visit as well, whether it's with a smartphone or other devices. And so, yes, we are in that learning phase so that we can start ramping scale of the business.
And the current financial position of the company, how's cash looking? The sort of monthly, quarterly spend? Yep.
So we were very fortunate that just before the COVID crisis hit, we raised capital. So we raised $5 million back in February. We're spending just over $1.25 million a quarter. So we have a fairly long runway, which we believe will get us to a position where we have revenue coming in the door.
And touching on revenue, it's the $1 million question everyone asks. What's your view on when meaningful revenue will start hitting the company?
So we're not providing guidance around revenue at this stage. We're still in early commercialization phase. It's very difficult to provide detailed guidance. But considering that we now have 2 telehealth providers going live this quarter, we have Sleep Check going live on the App Store this quarter. We're obviously working with the COVID clinic here. They have a free license until the 1st of September. We're also talking to other clinics around Australia and internationally. So the second half of this year, or the first half of next financial year, should be a transformational year for revenue-wise.
And in terms of the COVID-19 testing, I'm not sure how many have tested positive through the facility, but are you getting access to positive test results so that you can look at how the cough signature works with those patients? Yeah, so there's not many COVID patients that we're seeing. Obviously, we're very fortunate in Australia, and we're very fortunate in Queensland especially, to have very few COVID-19 patients. As I said, we're obviously monitoring the situation at the clinic, and we get some feedback around the use of the product on different segments of the population. So yeah, I can't say much about that because, as I said, we're very fortunate to actually not have that many COVID patients in Queensland at this point. And maybe not a question that you can answer at this time, looking too far ahead, but a question has come in asking, should you look to go to the market to raise capital again, please keep in mind or provide an opportunity, if you can, to retail shareholders who would be very keen to participate.
Yeah, look, I always understand retail shareholders are keen to participate in these capital raises. Oftentimes there's not an opportunity to do so. It does take a lot of time to put together those sorts of plans. and often you're approached by institutional investors who have the ability to put money into the company very quickly. But we always look at that as an option and evaluate that option on a case-by-case basis. At this point, at this point in time, we're not looking at capital raising.
And lastly, just in relation to a couple of the trials that you'd previously talked about, I think the question that's come through in relation to German hospital trials, how are they going?
So we have a number of trials that I guess are on pause at the moment. So we're working in the UK. We have approval for 2 health economic evaluations in the UK. We have a similar evaluation in Germany, which has been on track for a while. Most clinical research, especially most clinical research in the emergency departments globally, is on pause at the moment until emergency departments can get past the initial shock of COVID-19 and the issues that that's causing in those emergency departments. So we're expecting those trials to kick off once the burden of COVID-19 has gone through those locations. So yes, we have a number of trials that are, I guess, on pause until COVID-19 has sort of washed through the system, especially in the EDs.
And Tony, it goes without saying that across the board in the biotech tech space, due to COVID and the restrictions that are in place, a number of things have been paused. But as you say, the telehealth and other areas of the business are moving ahead strongly. So you should be congratulated for funding the company up before this hit, but also for ensuring that key elements of the business strategy have been maintained or expanded during this time, with a number of, as you say, transformational opportunities coming ahead over the coming months. So, Tony, we could sit and ask questions for a considerable amount of time, but I think I've grouped most of them nicely. I apologise to any questions that have been missed, but thank you for your presentation. I'd also like to thank Ralph and Rod for their presentations. We have had over 200 investors on the call or the webinar over the last hour, so thank you for tuning in and participating. As I mentioned at the beginning, TechKnow Invest Roadshow as a physical event prides itself on introducing to investors real, credible, high quality technology and biotechnology companies. Through the advent of this webinar series, we plan to continue to do that and bring companies together for you, the investors, to follow. I'd like to thank Vertical Events, the event organisers of the TechKnow Invest Roadshow, and my colleagues at Chapter 1 Advisors for the work that's gone into this event. We plan to conduct these regularly, probably on a fortnightly basis, but we'll keep you posted. If you have any companies you'd like us to showcase, we'd be more than happy to look to bring them to you. So without further ado, I'd like to thank all of our presenters for their presentations, the attendees for participating. Wish you all a great and safe rest of the day, and we'll be in touch about our next event very soon.